Okay, let's imagine a financial jungle for a second. In this jungle, there are two creatures. One, let's call it the monkey, spends its entire life frantically digging for bananas, but always feels like it's falling behind. Then there's the other one, the silverback. He sits calmly, watching a storm brew, not with fear, but with anticipation. Now, this isn't just a story. It's a powerful way to think about how wealth is really built in the world we live in today. So let's break it down.
So on one side, you have the monkey. And let's be honest, this represents most of us. We work hard, we try our best to save, we guard that little pile of bananas we've gathered. But on the other side, you have the silverback. The silverback gets the deep structure of the jungle. He's not necessarily working harder, he's working smarter. He's actually using the very forces that terrify the monkey to his own advantage. So, what is this hidden force? This constant wind whipping through the trees? It's inflation. You know, that thing we're all taught to see as a total disaster, the thing that eats away at our savings and makes everything we buy more expensive. But the silverback, well, he has a secret. He knows how to turn this destructive wind into a powerful engine for growth.
To really get what the silverback is doing, we first have to understand why the monkey's strategy just doesn't work anymore. And it all starts with the financial advice we've been fed our entire lives.
The formula seems so simple, right? You know the drill. Step 1, earn your income, your bananas. Step 2, cut your expenses, skip the lattes. And then step 3, save whatever's left over. We're told over and over that income minus expenses equals savings, and that this is the path to wealth.
But here is the absolute key. This advice, this whole strategy, is for a game that isn't even being played anymore. The fundamental rules of our financial world have changed. So while we're all busy playing by the old rules, the very value of the pieces on the board is constantly changing under our feet.
And this quote just hits the nail on the head. In an environment where the currency itself is constantly being devalued, just holding on to it means you are guaranteed to lose purchasing power over time. Your pile of bananas is shrinking in real terms, even if the number of bananas in the pile stays exactly the same.
So what you end up with are two totally different kinds of players. You have the consumer, who's still playing by those old rules, focusing on saving more and more. And then you have the capital architect, that's our silverback, who understands the new rules and focuses on something completely different, not on saving, but on structure.
So how does the silverback build this winning structure? What's the secret sauce? Well, the answer lies in a part of finance that, frankly, most of us are taught to completely ignore.
So what is it? What's the one thing that separates the monkey's frantic digging from the silverback's strategic calm? It's not about working harder, and it's not even about being more disciplined.
And here it is. This is the core difference. The monkey manages a budget, a profit and loss statement. It's all about cash flow, money in, money out. The silverback, on the other hand, manages a balance sheet. He's thinking about his total assets and his total liabilities, and crucially, the relationship between them.
You see, inflation has two effects. It takes two bites. We all feel that first one, right? Our cash buys less. Ouch. But the silverback is laser-focused on the second, less obvious effect. Inflation also eats away at the real value of fixed debt. That 30-year mortgage, that student loan, it actually becomes lighter, easier to pay back over time as each dollar becomes worth less than it was when you first borrowed.
And that is the secret. It's the whole magic trick. The silverback doesn't just brace for the storm of inflation, he harnesses its power. He uses this dual nature of inflation to his advantage, literally transforming the very thing that destroys the monkey into the fuel for his own growth. It's like a kind of financial alchemy.
Okay, so let's get into the nitty-gritty. How does someone actually weaponize this wind? I mean, it sounds great in theory, but how does it actually work in practice?
The core concept has a bit of a fancy name: balance sheet asymmetry. But don't let the jargon fool you. All it really means is that inflation doesn't treat both sides of your financial statement equally. It pushes one side up while simultaneously pushing the other side down.
Let's use our jungle metaphor again, because it makes this crystal clear. Think of a hard asset. We're talking real estate, gold, maybe even some specific stocks or Bitcoin. Think of that as the tree. When the wind of inflation blows, the value of that tree goes up. Now think of a fixed-rate liability, like a mortgage, as the vine. As that same wind blows, the real weight of that vine goes down. The silverback uses the shrinking vine to climb the growing tree.
And listen, this isn't just a metaphor. It's a very real corporate strategy. Take a look at the company MicroStrategy. They realized that holding a ton of cash on their balance sheet was like holding a melting ice cube. So they decided to stop running from the storm and instead to buy the very things the storm makes more valuable.
Their playbook was brilliant, and it follows our model perfectly. They took on massive amounts of low-interest fixed debt, our vines. Then they used that capital to buy a hard asset, in their case Bitcoin, our magical seeds. So now, as inflation runs wild, their asset appreciates in value while the real cost of their debt deflates. Now, of course, this isn't risk-free. The whole strategy depends on the asset's value growing faster than the cost of the debt. If that asset price tanks, or if your debt is variable and interest rates spike, that win can turn on you real fast.
So this brings it all back to us. We might not be a billion-dollar company, but the principles, they're exactly the same. We all have a choice to make about which game we're going to play. The consumer mindset asks a question of fragility. It asks, how can I lower my bills? How can I cut back just to survive? It's all defense. The corporate or silverback mindset asks a question of anti-fragility. It asks, how can I structure my assets and liabilities so that I actually benefit from chaos and volatility? It's all offense. And this, right here, is why we see the wealth gap getting wider and wider. It's not just a gap of income, and it's definitely not a gap of effort. It's a gap of financial architecture. One group is exhausting themselves swimming against the current of inflation. The other group has built a sailboat and is using that same current to their advantage.
So the first question you really have to ask yourself is a simple one. Are you just holding on to the currency that is literally designed to melt over time?
Or have you positioned yourself to own the scarce, hard assets that everyone else is going to be chasing with their melting currency? Are you on the right side of that chase?
And what about debt? Have you been taught that all debt, every single vine, is bad and something to be terrified of? Or have you learned how the right kind of debt can actually be a powerful tool, a vine to help you climb higher into the canopy where all the best fruit is?
Ultimately, the old financial questions we've been asking just don't work anymore. The most important question is no longer, how much can I save? The question we have to answer now is, how will you structure your survival? In a world where the financial ground is constantly shifting beneath our feet, that is the only question that truly matters.